All right, so we're diving right into it today. Thailand's interest rate. Everybody's talking about it. Will they? Won't they? What's going on with this Bank of Thailand meeting coming up?
Well, October 16th, mark it down, because that's when the Monetary Policy Committee, the MPC, will be having their second-to-last meeting of the year.
Second to last, so that means the pressure's really on, right? Everyone's watching to see what happens.
Absolutely, and especially since the last meeting, back in August, they decided to keep things as they were.
Held the rate steady at 2.50%, if I recall correctly, and that vote wasn't even close.
Yeah.
6-1, they wanted to keep things right where they were. So the big question is, will they budge this time? We've been doing our homework, going through articles, analyses, Forbes, Thailand, Prachachat, Thai PBS.
You name it, we've read it. Madishan, Tansataki, Tyrath.
There's a lot of different voices out there, and it seems like opinions are pretty divided.
Oh, they definitely are. You've got some major players, CIMB, Casacorn Research Center, SCB, EIC. They're all saying, don't get your hopes up for a rate cut.
Their reasoning being?
Well, they're looking at the current rate and saying, hey, the economy seems to be doing okay. Why mess with a good thing?
Right, because it's all about finding that balance for growth. And on top of that, there's that whole global currency situation to think about.
Exactly. A rate cut might weaken the Thai baht against the U.S. dollar. And what happens then?
Thai exports could take a hit, right?
Yeah.
Suddenly they're more expensive on the global market.
Precisely. It's a real tightrope walk for policymakers.
Okay, so that's one side of the coin. But then there's this whole other group of experts who are saying a rate cut is practically inevitable.
And one of the most vocal proponents of this is Dr. Amaradep Jawala from CIMB. Interestingly, he's actually saying hold off for October, but he's already calling a 0.25% cut in December, down to 2.25%.
A December surprise. I like it. But it's not just him, right? We've got Dr. Samprawan Manprasert over at SCB EIC. He's also on board with the rate cut train, thinking it could go even lower to 2% by early 2025.
It's like a domino effect. And what's really interesting is the global context for all of this. It's not just Thailand. We're seeing this trend towards looser monetary policies worldwide.
Like the U.S. Federal Reserve. They just cut rates recently.
And indications are pointing to another cut in their upcoming meeting as well. China, too. They're cutting rates. So it begs the question, can Thailand really afford to be the odd one out?
Like showing up to a party overdressed, not a good look.
And it's not just about keeping up with the Joneses, so to speak. There are some internal factors at play in Thailand, too. Like, yeah, the economy's showing some signs of life, but there's this underlying worry about domestic demand. It's sluggish, to say the least. And then there's the whole household debt issue looming large.
It's like walking a tightrope, isn't it?
Yeah.
One wrong step and...
Exactly. And that's where these calls for a rate cut really come into play. Think of it this way. Lower rates could potentially give borrowers a bit of a break, free up some cash flow, maybe even boost consumer spending.
A little shot in the arm for the economy. But wait, didn't we just talk about how a weaker baht could hurt exporters? This whole rate cut thing seems like a double-edged sword.
You hit the nail on the head. It's about carefully considering the pros and cons. And that's what makes this upcoming MPC meeting so fascinating. It's like a game of chess.
High-stakes chess. So what's it going to be, MPC? A bold move to cut rates, try to rev up the economy, but risk a weaker currency, higher import costs. Or play it safe, maintain stability, but risk continued pressure from borrowers and maybe even slower growth overall.
That's the million-dollar question, isn't it? And to make things even spicier, let's toss inflation into the mix.
Right. People hear inflation and they immediately think, oh, that's not good.
And they're not wrong, especially when it gets out of control. But right now in Thailand, it's actually pretty tame, 0.6%.
Yeah, and forecasts for the whole year put it at a very manageable 0.5% to 1%. The BOT's target range is 1-3%, so...
Plenty of wiggle room, relatively speaking. Low inflation gives the MPC a bit of breathing space. It means they could potentially lower rates without sending everyone into a panic about prices skyrocketing.
Okay, so that's a point in the cut column? Maybe. But we can't forget those recent floods.
Yeah.
We must be weighing on the MPC's minds.
Absolutely. Devastating, those floods. And they've injected a whole new level of uncertainty into the economic picture. The MPC's got their work cut out for them, trying to figure out how badly things have been affected, revising those growth forecasts.
Like trying to hit a moving target.
Precisely. Will they see those floods as a reason to loosen the reins a bit, provide some economic stimulus with a rate cut, or will it be the opposite, a reason to batten down the hatches and prioritize stability? It's anybody's guess, really.
So many factors in play. And speaking of factors, we've got that whole global landscape to consider, too. Trade tensions, those geopolitical rumblings that never seem to go away, energy prices doing their own little dance.
It's a lot. The MPC can't afford to focus only on what's happening within Thailand's borders. They'll be keeping a very close eye on those external forces, especially U.S.-China relations and the global energy markets. Those could throw a wrench into things, no matter how carefully they plan.
It all comes back to that balancing act, doesn't it? But let's bring it back down to earth for a minute, back to our listeners. Because at the end of the day, they're thinking, okay, what does all this mean for me?
A fair question. We can talk about monetary policy till we're blue in the face, but the rubber meets the road when it comes to how it affects people in their everyday lives.
Because whether the MPC decides to make a move on rates or hit the pause button, the effects will be felt throughout Thailand's economy. And guess what? Those effects, they reach you too.
Absolutely. Let's say they go for the rate cut. Borrowers, they're probably going to be pretty happy about that.
Especially those with big loans, right?
Exactly. Home loans, business loans, anything tied to that policy rate. Think about it, lower monthly payments, a little bit more breathing room in the budget, could even lead to a boost in consumer spending.
Music to any economy's ears.
Right.
But let's not forget about the bat. That rate cut could make imports a bit pricier.
It's true. That vacation you've been planning might have to adjust the budget a tad.
And those imported goodies you love, yeah, those might cost a bit more too.
Trade-offs, trade-offs. But what if the MPC decides to play it safe? Keep rates where they are. Well, that would mean more stability for the currency.
And for people who like to know exactly how much their imported coffee is going to cost them every week, that's a win. But what about those borrowers we talked about? The ones who are really feeling the pinch?
Yeah, if rates stay put, it'll be more of the same for them. No sigh of relief.
And for the economy as a whole, could it mean slower growth?
It's possible. Businesses might hesitate to take out loans to expand. Consumers might keep their wallet zipped a little tighter.
It's a real puzzle, isn't it? But here's something I think is worth pondering, and this is for all our listeners out there. Let's imagine the MPC decides to take the cautious route. Keep those interest rates low for a good long time. What does that actually mean for Thailand's economy down the road?
The billion-baht question. It's tricky. On the one hand, yeah, those low rates can encourage spending in the here and now, give the economy a little jolt.
A sugar rush, you might say.
Exactly. But what about the long game? Could it actually discourage saving?
Because if your money's not really growing in the bank,
You might be more inclined to spend it, right? It's a classic dilemma for policymakers. Do you focus on stimulating the economy today or encouraging a more, let's say, financially prudent approach for tomorrow?
it's all about finding that balance.
Always is. Weighing those benefits and risks, understanding how all the pieces fit together, not an easy job, that's for sure.
No easy answers in economics. But hey, that's what makes it interesting, right? So to our listeners, here's the takeaway. Pay close attention on October 16th. See what the MPC decides to do. Think about what it means for you, what it means for Thailand. Because that's what this is all about, understanding the ins and outs so you can navigate the economic waters like a pro. Until next time.